Introducing the Institutional Pivot Matrix, a quantitative market timing framework designed to identify institutional accumulation and distribution zones, projected expansion targets, and high-probability reversal windows in real time. This system was built to help traders align price, structure, and time within a unified execution model. Most traders miss major market reversals, not because they lack effort, but because they lack institutional structure. Without quantified buy and sell zones, traders are left reacting emotionally to price movement. False breakouts, emotional entries, and a lack of time cycle awareness often result in late entries and premature exits. The institutional pivot matrix was designed to eliminate that uncertainty by defining structure before the move occurs. The institutional pivot matrix identifies where institutions accumulate positions and where they distribute inventory back into the market. These zones are derived from structural price ranges and expanded using quantitative projection models. Primary zones represent high-probability reaction areas, while secondary zones define deeper institutional positioning levels. Within the framework, accumulation and distribution zones are clearly defined. Green zones represent institutional accumulation, where buyers are expected to defend structure. Red zones represent institutional distribution, where supply enters the market. Directional arrows are generated within these zones, providing objective buy and sell signals based on structural positioning. Once price exits institutional zones, the pivot matrix structured expansion targets. These targets are derived from measured move analysis and expansion modeling. Primary targets define expected institutional reaction points, while secondary targets project extended directional movement. Markets move not only in price but in time. The institutional pivot matrix time cycle reversal windows, identifying when price is most likely to change direction. When price enters a structural zone and aligns with a projected time window, reversal probability increases significantly. The highest probability trading opportunities occur when structure, targets, and time cycles align simultaneously. This convergence is known as institutional confluence. When confluence is present, directional conviction increases and execution risk decreases. The execution process follows a structured sequence. First, identify institutional structure. Second, wait for time alignment. Third, execute using directional triggers generated within the zones. This transforms trading from emotional decision-making into rule-based execution. Now that you've seen the institutional pivot matrix framework, let's transition from theory into real-time market application. In the next segment, you'll see how institutional accumulation and distribution zones, projected targets, and time cycle windows appear on live charts. From there, I'll hand it over to Gary Dean, creator of the Institutional Pivot Matrix, to walk you through how he personally executes trades using the software.
Look at the Institutional Pivot Matrix framework. Inside live charts, the first thing that traders need to do is determine their anchor, typically a swing low to a swing high, and that is going to give us our accumulation zones. Accumulation zones represent institutional demand areas where buyers historically begin positioning within a structured range. If price engages into our accumulation zone and it holds, our upside expansion targets come into play. Targets 1, 2, and 3. Now on the distribution side, our anchor points would be our swing high to our swing low, and the software automatically generates our distribution zones, the primary as well as the secondary. If this holds down and price goes down, it activates our downside pivots 1, 2, and 3. This here is our timepiece of it, and that's a very important part of the model because you want to know when the important times are where we may see some kind of price activity or reversal. So these are the different time frames based off of our anchors right here, and they're spread out like that. And typically we look for some type of reversal or an extension of the rally that's going on. So you always want to keep an eye on these time periods. This framework defines directional pathways before price reaches them. So if price breaches here, our upside targets that are activated are 1, 2, and 3. If price breaches down here, Our downside targets are activated, and we have price 1, 2, and 3 within our institutional zones. The model identifies buy and sell pivots. These represent inflection points where directional momentum begins to shift inside structural positioning. The green pivot markers represent accumulation, and the red pivot markers represent distribution. These pivot levels provide execution. Rather than entering randomly inside zones, traders can align entries within the directional inflection points. So what we're looking at is a structured institutional framework. Structure defines institutional positioning. Zone expansion. Targets define directional pathway. Projected time windows identify cyclical probability, and the execution pivots refine entry within that framework. The model is objective and rule-based. It removes subjectivity from directional planning and replaces it with structured probability. Let's now transition to Gary Dean, creator of the institutional pivot matrix, as he walks through how he applies the framework in live market conditions.
Hi everybody, Gary Dean here. What I want to go over in this video is showing you how I actually use the institutional pivot matrix. I trade it on a daily basis. Now, I like to use IWM. It's just one of my favorite instruments to trade, do options on it. Really, they're just quick scalps, and sometimes when they ride, I just let them go. But what I like to do before anything, if I make any trades, is find out where are we, 60-minute, 15-minute, 5-minute, and then the ones that really are trading. So let's go to the 60-minute, and again, we're going from this high to this low, so that's our anchors. And really the way that you do this, I can show you real quick, is you take your cursor, the line marker, you don't go here, so you go from here to the last bar. So that's, you can see up in the underneath the XTO, it says 166 bars. Delete that out. It should say 166, 163. It's the same thing, so it shouldn't change at all. But what that's automatically going to do is give us our institutional distribution and accumulation zones. And you can see right here that we're running right into our primary distribution for IWM. From that part of it, what I like to do is then go to a 15-minute chart and find out where we are, and we're still in it. So even going from this high to this high, we're still in this. So we knew that from here we got a fantastic buy signal. We had bullish ever. We were able to ride it up, just say right around that 259.76 all the way up to 263. It was a fantastic trade. We came down, and then we're coming up, and now we're back into this area here. So to me, I'd be more looking short side, but that happened actually a little when I was putting the video together, because we got this sell signal here. You can see we have these bearish divergences, and so that's given us a reason to say, okay, we got to be looking to short, as we even made it, this was accumulation for the short term from this top to this low. Accumulation came, we made right back up to first target, but we have the sell signal. So right now you can see this popped in, and you'll see from this was at 1510. We can see now I go to a 1-minute chart, and this is really how I trade on it. So if I see the 5-minute that we're about to roll over, or we're in a bearish divergence, I go into the 1-minute and say, all right, so now I took it from where it was actually from this low to this high, this pivot. We're right in that in the accumulation end. If you would have taken that trade on this right here where we had our distribution signal, you would have got 265, we're down to 264.55. 10 contracts, you would have gotten probably $300-400 right now. But the thing is, if you look, we're on a sell signal here on the 5, you can see that. And if we go to a 15-minute chart, we're now on a sell signal there. And you can see they have a lot of duration here because pretty high up. These are the ones where you make a ton of money, is when you have a maximum duration from top to bottom. And that's usually when you get your 5 or 6 point move. But this right here, I'd be looking IWM to come, probably somewhere into our mid zone here, and that's from this low to this high. And it may not happen today, but it's going to be anywhere to the 262.40 down to the 261. This is really how you use it. It's a very powerful indicator, just because you're able to see what your targets are before you take the trade. So if you took this 1-minute trade, this was your target. That's the problem that a lot of people don't realize, is they don't have a target in place. Didn't hold right now. You can see IWM's heading down quick. So we're going to head down to a secondary pivot. And if that gives way, then what it's going to tell us is that our distribution is winning this game right now. And the next support level will be back down near this 262. So you build your trading plan off of this, and then you wait for these signals. Like one up here here, when we have a big move up here, I would ignore this. I would not take it because, first of all, we have bearish divergences. On two, we've already jumped up this far. So if we get a move here, it's usually just a head fake. And the same down here. If we come up and we get some sell signals when we're down in these levels, I'll ignore them and just wait for the buy signal and then jump in, because you can see if you just took this buy here, you went from 259 all the way up to 264. That, again, 10 contracts, you just made $3,000 and you're risking $600-700. So it's a great trading IWM. I do it in a trade room, and I really use these charts on how to do it because I want to know where are my targets. This gives away where's my next target. My next target is going to be down here. If they decide to bounce, I can do the same thing where I'm going to say, all right, if they end up trying to bounce it, and I'm just going to use it for where it is now, and we're at 42 bars, so I'm going to go here and I'm just going to put in 42, and that will give us our resistance now. So you put it in, and from here, this is what the bulls are going to have to get through to get themselves out of harm's way, is the 264.86, 264.94. So this is our resistance zone. So if this is the first move down, typically you'll get a move up and then back down again, and these are going to be our downside targets. So that's how you use it. You know what your target is before you get into the trade, and that's how you make money. If you get into something and all of a sudden the secondary gets taken out, you just simply step out of the trade and say it didn't work, and you wait for the next one, and that's it. So it's a very, very powerful software to be able to help you build a framework on how to trade. And like I said, I use it every single day, and things have been doing really, really well with it. And if you're not trading with a proper framework, it's very hard to make money in this market because you get whipsawed in and out, and you're always chasing the upside, and then you're getting pulled to the downside. So knowing where things are before you make the trade is probably the most important thing you can have as a trader.
The institutional pivot matrix is a complete institutional execution framework, not a lagging indicator. It quantifies buy and sell zones, triggers directional entries, projects expansion targets, and maps forward time cycle reversal windows, all through multi-layer price and time confluence. You've now seen the institutional pivot matrix operating in live market conditions, identifying institutional buy and sell zones, triggering directional entries, and projecting expansion targets in real time. If you're ready to move beyond lagging indicators and start executing alongside institutional structure, you can now get access to the software. And as part of your access, you'll also receive our 2026 Institutional Astro Roadmap, mapping projected bullish, bearish, and neutral cycle phases, including the Great Reset that was predicted to end between February 17th and the 20th, as well as anticipated the extreme market topping window into August of 2026. Start trading with institutional precision today. Download the Institutional Pivot Matrix now. Activate your license and begin executing with structure.